The silver shock that could crash everything. Let me tell you about something that's happening right now that could change everything about your money, your investments, and the entire stock market. And most people have no idea it's coming. 1 week ago, silver was trading at $32 per ounce. It had been stuck around that price for months. Financial experts called it boring. Nobody cared about silver. Everyone was chasing tech stocks and crypto instead. Today, silver is at $79 per ounce. It more than doubled in just 7 days. This isn't normal. This isn't speculation. This is something much bigger breaking down. And here's the scary part. This is just the beginning. You need to understand what's really happening here. Because when silver prices explode like this, it doesn't just affect silver. It creates a domino effect that's about to hit your stock portfolio, your tech stock, and potentially trigger the biggest market correction we've seen in years. Let me show you exactly what's going on and why this matters to you. Why silver is different from everything else. Silver isn't like other investments. It has two personalities that make it uniquely dangerous when supply runs out. First, it's an industrial metal. Silver conducts electricity better than anything else on Earth. Every solar panel needs silver to work. Every electric vehicle has 25 to 50 grams of silver in it. Every 5G tower uses 3 to 5 times more silver than old cell towers. Your smartphone, your laptop, even the servers running the internet right now, they all need silver. This isn't optional. Companies can't just decide to use less silver without their products performing worse. A solar panel without enough silver loses 15 to 20% efficiency. In a competitive market, that's the difference between profit and bankruptcy. But silver is also money. For 5,000 years, humans have used silver as currency. Unlike dollars that governments can print endlessly, there's only so much silver in the ground. And here's the problem. We're running out of easy access to it. The supply crisis nobody saw coming. Every year, the world uses about 800 million ounces of silver, but we only mine about 830 million ounces. That tiny gap used to be filled by government stockpiles and warehouses. But those stockpiles are now empty. The U.S. government sold all its silver decades ago and has literally zero in storage right now. Even worse, you can't just mine more silver when prices go up. About 70% of silver comes as a byproduct when mining other metals like copper and lead. So even if silver hits $100 or $200 per ounce, production barely increases because mining companies are digging for the other stuff, not silver. This creates a trap. Demand keeps growing from solar panels, electric cars, and technology. Supply can't increase quickly, and the safety buffer is gone. That's why the price just exploded. China just made everything worse. On December 15, 2024, China quietly announced new export rules for silver starting January 1, 2026. Most people missed it, but it's about to change everything. China refines about 25% of the world's silver and has been exporting it to the U.S., Europe, and other countries. Under the new rules, only big companies can export silver, and they need special licenses. Small exporters who used to supply Western manufacturers are now blocked. Why would China do this? Because they need silver for their own solar panels and electric vehicles. China makes 60% of the world's solar panels. They're not going to let that silver leave the country when they need it themselves. Starting January 1st, about 150 to 200 million ounces of silver that used to flow from China to the West simply stops. Companies that relied on Chinese silver are now scrambling to find it anywhere else. And there isn't enough anywhere else. The hidden accumulation, here's where it gets interesting. For over a decade, Certain large banks have been quietly buying and stockpiling physical silver. We're talking about 500 to 750 million ounces sitting in private vaults. That's almost an entire year of global mining supply locked away. How did they do it? Every time silver prices started rising and regular investors got excited, massive sell orders would hit the futures market at 3 a.m. when nobody's watching. The price would crash 5 to 10% in minutes. Scared investors would sell their physical silver, and the same banks that crashed the paper price would buy the physical metal at the new lower price. They paid nearly $1 billion in fines for market manipulation in 2020, but that's nothing compared to what they made. If you accumulated 700 million ounces at an average of $20 per ounce, that cost you $14 billion. At $79 per ounce, it's now worth $55 billion. That's a $41 billion profit. $1 billion fine is just 2% of that. It's not a penalty. It's just the cost of doing business. But here's what changed. In mid-2025, these banks closed their short positions. They stopped fighting the rally. They're now positioned to profit from higher prices. That's why silver broke through $30, $40, and $50 without the usual resistance. The people who used to cap the price now want it to go higher. How this destroys stock prices. Now let me show you how this cascades through the stock market and why your portfolio is at risk, even if you don't own any silver. Start with solar companies. First Solar, Enphase, SunPower. They all built their business models assuming silver would cost $25 per ounce. A typical solar panel uses $8 to $16 worth of silver at that price. Now silver is $79. That same silver now costs $25 to $50 per panel. But here's the killer. These companies already sold panels at fixed prices based on cheap silver. They have contracts they have to fulfill. Every panel they deliver now loses money. Their backlog that was supposed to generate billions in profit is now generating losses. When a company's future earnings go from profit to loss, the stock doesn't drop 20%, it drops 60 to 80%. Because the entire business model is broken. First Solar could easily fall from $280 to under $100 as investors realize the margins are gone. Electric vehicle makers face the same problem. Tesla uses $20 to $40 worth of silver per car at old prices. At new prices, that's $63 to $126 per car. Multiply that by 1.8 million vehicles per year, and you're looking at $155 million in extra costs. That directly hits profit margins. Tesla trades at 70 times earnings because investors expect massive growth. If growth slows and margins shrink, that multiple could easily cut in half. The stock could fall 50% just from multiple compression, even if sales don't decline. The technology sector gets hit across the board. Apple ships 230 million iPhones per year. Each one uses silver. At $79 silver versus $25 silver, that's an extra $70 to $175 million in costs annually. Apple can handle it because they have $162 billion in cash. But smaller manufacturers can't absorb these costs. They either raise prices and lose customers, or they maintain prices and go bankrupt. Why governments can't fix this? Here's the most important part that almost nobody understands. Governments can control financial assets. The Federal Reserve can print money. Congress can pass spending bills. The President can issue executive orders. But governments cannot control physical commodities when the earth simply runs out of easy access. The Fed can print dollars, but they cannot print silver. Congress can pass laws, but they cannot legislate silver into existence. The president can sign executive orders, but geology doesn't care about paperwork. Think about the 1973 oil crisis. OPEC cut off oil supply and prices quadrupled. President Nixon tried price controls. They created shortages and gas lines. He tried releasing strategic reserves. They were too small to matter. He tried negotiating with OPEC. They ignored him. The government was powerless because you cannot political will your way around geology. It took 7 years of economic pain before new oil supplies from Alaska and the North Sea finally solved the problem. 7 years of 12% inflation, 9% unemployment, and a 48% stock market crash. What happens next? Let me walk you through the timeline of how this plays out over the next 12 to 24 months. January 2026, China's export restrictions take effect. Initial shipments drop 40 to 50% immediately. Western manufacturers still have 60 to 90 days of inventory, so they don't panic yet. Silver prices hold at $75 to $85 as everyone waits to see if this is real. February to March 2026, inventories run out. Companies realize Chinese silver isn't coming back. Panic buying starts. Silver spikes to $95 to $110. Solar companies report massive earnings misses. Their stocks crash 40 to 60%. The Nasdaq falls 12% as tech investors worry about margin compression everywhere. April to June 2026. Industrial users compete desperately for scarce supply. Physical silver becomes unavailable at any price in some markets. Tesla and Apple announce long-term supply contracts with miners, paying $120 to $150 per ounce for 3 to 5 year deals. Their stocks fall another 10 to 15%. As margins compress. Solar stocks are now down 60 to 70% from their peaks. July to September 2026, mining companies start responding to high prices, but new supply takes 6 to 12 months minimum. Meanwhile, demand destruction begins. Some companies switch to less efficient alternatives. Solar installations drop 25% globally. EV sales slow. This stabilizes prices at $100 to $120. The S&P 500 is down 18% from peak. Tech stocks down 25%. 2027 onward. New supply finally comes online from expedited mining projects and increased recycling. But China keeps export restrictions. Prices stabilize at $85 to $120, which is 3 to 4 times higher than the $25 to $32 range we had before. This becomes the new normal. Companies adapt by redesigning products, accepting lower margins, or going bankrupt. The era of abundant cheap silver is over. The bigger picture silver is just the first domino. The same thing is coming for copper, nickel, cobalt, rare earth elements, and every other critical material needed for the energy transition everyone wants. For 40 years, we lived in a world where financial assets were king. Stocks, bonds, real estate. Everything went up because central banks could print money. Physical commodities seemed boring and irrelevant. But you can't print silver. You can't download copper. You can't create lithium with monetary policy. When the physical world runs short, all the money printing in the world doesn't matter. This is the great rebalancing. The financial economy is being forced to acknowledge the physical economy again. And for people who understand this shift, there's enormous opportunity. If you believe this analysis, you won't own things that benefit from higher silver prices and avoid companies that get crushed by higher input costs. Physical silver itself provides pure exposure with no counterparty risk. Silver mining stocks could rise 200 to 400% as their profits explode. Meanwhile, solar manufacturers and smaller EV companies without hedged supply could lose another 40 to 60%. The lesson here isn't just about silver. It's about recognizing that governments and central banks aren't as powerful as everyone thought. When geology and physics bind, money printing becomes irrelevant. Markets are relearning this lesson right now, and the cost of that education is being paid by anyone who built their wealth assuming commodities would always be cheap and abundant. That assumption just died, and the adjustment is going to be brutal for those caught on the wrong side.